Okay, so all right, I'm gonna get this show started. So, hello, welcome to episode 16 of AfroFinLab, where we aim to make this crypto nonsense make sense. My name is Aziz Saeed, and I'll be hosting today's episode. This week's expert is Umed, a seasoned investment professional focused on digital asset research, advising institutional investors on the implications of adding crypto assets to their portfolios, build and also building a world-class gateway for digital asset research. To some people, that may not make any sense at all, and that's why we have a referee. The referee's role is to feel comfortable to ask the quote unquote dumb questions. Feel free to probe, okay? So today's referee is Jay Arzu, an Afro Latin American who grew up in the poorest congressional district in the United States. Here, achieving dreams comes with a different set of hurdles due to the effects of urban poverty, but he also doesn't let that hold him back. He wants to be somebody who can give others hope, regardless of his environment and background. I think it's safe to say his grandmother put batteries in his back, instilling him with a sense of community and a desire to give back to those who need it most, even when they do not have that much to give themselves. Jay's grandmother always told him that the best people in the world are the kind who are selfless and pay it forward. He's a hard worker and is no stranger to putting himself out there. Welcome to AfroFinLab, Jay and Umed. We're delighted to have you on today's show.
Pleasure to be here.
Thank you.
Jay,
It's
fun
great to
fact
be
that
here.
I already told you, I was actually a referee myself on this show just a couple of weeks ago, and I'm going to say it again. Please, please feel free to interject at any point. There's no pressure to do so, but I want you to feel comfortable to interject at any point to ask any questions. Don't be afraid. There's no dumb questions here at all.
Aziz, I already feel more than comfortable and I'm ready to learn and have an open mind and I'm ecstatic about this.
Great. Here at AfroFinLab, the goal is to make this crypto nonsense make sense. And we want you to help us do that. And we want you to help us do that while Umed opens up our world to his world. As I said, I was a referee on AfroFinLab just about a few weeks ago. I literally only started learning about blockchain technology 3 months ago. I'm not tech savvy. I actually work in the creative industry. And the reason that I'm telling you this is that I want you, as well as our audience, to know that AfroFinLab is a safe space for people within the diaspora and beyond to follow their curiosity into the ecosystem, the blockchain ecosystem. So without further ado, I guess let's get into it. And I'm going to just explain how the show is going to run. So we're going to get discussing for about 45 minutes. As I said, Jay, feel free to interject at any point. And then there'll be 15 minutes for questions and answers afterwards. So I guess let's go.
All right.
So, um, Jay, do you have a question for Umed? You were asking him a question just before we started. Do you want to get it back into that again?
Yeah, we can get back into that. The question I had previously asked was just how the exchange rates, play into Bitcoin and if you were, to use American dollars or maybe even Brazilian real, how would that, be converted to Bitcoin? And how's the value, equate?
Yeah. So the exchange rates, right? Exchange rates are something that's very complex, and largely the exchange rate between two countries, for instance, is dictated by the amount of supply and demand. Surprise, surprise, right? Um, and that basically is a proxy between for these two countries, let's say exports and imports, and that's basically the underlying reason why the exchange rates might fluctuate. If I'm a big corporate and I'm trying to basically buy equipment from country A, for instance. These are uh, you know um, instances where you could think about it in concrete examples. I might buy a large, if I have to buy, for instance, a large number of, let's say, Boeings in the United States, I need to secure that many dollars because Boeing takes United States dollars, right? So what you do is you go out to the market, and depending on what your strategy with your currency is, you might buy it openly, or you might buy futures or forwards and whatnot. and secure that that rate as soon as you find out that you need to make that purchase. But regardless of that, so the exchange rates are, as I said, are defined by supply and demand, and that's basically real economy, basically creating those supplies and demands. And then the second thing, all else equal, the exchange rate between the two countries, it's at least in terms of frameworks, economic frameworks, is determined by something called the purchasing power parity, which essentially boils down to which currency is devaluing faster. So if you have an inflation rate that's faster than country A, let's say, has 8% inflation rate, country B has a 3% inflation rate, you can reasonably assume that the country A's currency in the long run, all else equal, will have lost in exchange rate. So it's going to devalue faster. So that's basically how the real economies and real exchange rates work in a nutshell. Now, when it comes to Bitcoin, it's quite a fascinating piece of technology that doesn't have a fixed inflation rate. So it's not like, oh, we have a base of like 100, and then next year it's going to be 108 Bitcoin, and then the next year is going to be 108 plus 8% again. Actually it's one time 1.08. But anyway,
could you explain inflation rates a bit? I feel like some of our audience members may not really understand that. You want to break it down for them a bit.
Absolutely. So inflation rate is the rate at which the currency grows. Let's say that I have, let's pick a number. I would just make it very simple, right? I have $100 in an economy, right? This year. Let's just pick that as a base year. And if inflation rate is 3%, next year I'm going to have $103. And then next year I'm going to have 100, because the new base is going to be 103. So it's going to be 103 times 1.03. So a little bit more than $106, things like that. So this is basically the rate at which the currency, grows. And it's set by the Federal Reserves or central banks in other countries, and it has an underlying reason to exist in real economies, and that is to motivate people to spend it and to invest, because holding the money actually costs you. So that's the basic motivation for inflation to exist. Keeping it under your mattress becomes very costly if you just keep it under your mattress and it's not used for any productive activity. So if you put that money in a bank, right now the banks are not giving you a lot of interest rates. But if you invest, let's say, if you invested in a venture that produces 20%, so what will happen is that next year you will get $120, of which $3 will be eaten by the inflation, but you will have had already $17 extra over and above inflation, and that's called the real rate of return. So, yeah, does that answer?
I already. Sorry, I had a quick.
Kind of like how you might like a burger, like a hamburger years ago, I think was like 50 cents, and now today the price of it has increased over time.
Exactly. And if you can actually see the inflation rate, there are public resources where you could check what the average inflation was over many, many years. And you will see that, yes, the reason why something was 20 cents or 50 cents and now it's, $10, it's because of inflation. Yes.
Yeah.
There's actually, go ahead, Mercy.
No, I think I'll give it to Jay. Jay, go for it.
Mercy, thank you so much. My question for you, Umed, you mentioned central banks a few minutes ago. I guess I'm curious about Bitcoin's oversight. Do central banks or the IMF or somebody have any oversight, or is this completely independent?
Yeah, so that's the thing with the cryptocurrencies, and I want to just basically give a background for this. When I came across cryptocurrencies, in the finance industry, you just basically don't question money that much. It's US dollars or pounds or euros, and all you have to do is to maximize returns and minimize risk, and that's what you are paid for as a financial sort of professional in most cases. And when I came across cryptocurrencies, it started basically undermining my understanding of currencies in general. The first thing I did was, recall what we learned in economics, right? In economics, currency is something that's, that people take. It basically is a unit of exchange. And when you, uh, give it to the merchant and they take it. And that's basically the definition of unit of exchange, because people are willing to take it for their goods and services. And then it's a unit of account, which means that, you keep your profits and losses, whatever in that currency. In the United States, it's a US dollar. In other countries, it's other currencies. So that's basically how you express your accounting. And then there's this store of value, basically concept. Even though in the long run, it's a terrible store of value, I have to say, because there's inflation, but it's a store of value unstable store of value for people who want to.
Explain what a store of value is, please.
Yes. So store of value is something that allows you to store your wealth without too much impairment. So impairment means that it's not gonna erode. So I have these memes floating around. This raccoon is taking was it an ice cream or something, and it puts it in the water and it just goes away. Store of value is something that doesn't go away. And it over a long period of time, if you just keep your dollars under your mattress, it starts eroding. The inflation starts eroding them. And in the long run, your currency, I would argue, it's not a good store of value. In the short run, it might be, because, if you are in something that's very volatile, very risky, you might want to park your, wealth in US dollars until things get settled down, and then you can enter the investments again.
Is that why people buy gold?
Yes. So that's another thing, right? Gold is widely considered store of value. And the reason for that is nothing but, the fact that we all agree that gold is store of value. Why gold and not platinum or any other metal? That's a good question. And when I came across this concept of cryptocurrencies, I had to, go back to the basics and find out, beyond what those three, characteristics of currency are. I wanted to understand the historical sort of background behind currencies. And I read a book called The History of Money by Jack Weatherford. And the beautiful, beautiful thing about that book is that it was written in 1995. It's untainted by all this crypto maximalism. So it just gives you an unbiased picture of what the currency was and how it came to be and where it's going. And it blew my mind how exact it was in terms of predicting where the currencies would go. And at the end of it, it's basically was saying that the currencies are becoming digital, and the natural evolution of that, if you think about it, is Bitcoin. And yeah, right now Bitcoin is the store of value, but not quite the currency, because it cannot process that much transactions. But I would argue that it's a very good alternative to gold at this point.
Umed, I have a quick question for you before Jay, you come back in. So, like we are talking about Bitcoin, we are talking about gold as a store of value and currency, and like we looked you up, and you have an amazing store of experience. What made you decide to, come into the Cardano ecosystem, the Cardano community? Like looking at somebody like Umed, for those who don't know, like he's all over the place when it comes to Cardano, and he's a very valuable member of the community, very knowledgeable. So what actually made you decide that, okay, I think I want to settle on Cardano? And then secondly, this is going to be a two-part question. Secondly, like we hear all these questions about or statements, Charles makes that statement, our new CEO, by the way, that was an excellent interview you had with him. He just talks about how Cardano is going to be, a protocol for the unbanked. Is this something that you agree with? And yeah, so that's the two-part question. Tell us what made you come, like there's Bitcoin, there's gold, there is all these things, but then you centered on Cardano. And do you think that all the promises that Cardano is making currently is true in terms of poverty alleviation and Africa and poor communities?
Mercy, before Umed answers, I want to ask you, what is a protocol for the unbanked? What does that mean?
I love that. Okay, James, can you help us with that? Or maybe, Umed, whilst you are answering the question, maybe you can throw a bit more a bit more light on that.
Absolutely, I can take them one at a time. So why Cardano, right? Well, I came to the ecosystem when I got a free invite to come to a conference, the VIP invite to New York, and it was free. It was interesting stuff going on there, and I chuckled to myself, going there, and I thought, these guys, the crazy guys who think that they can create value or create money, I got exposed to crypto at that point, and I learned about Bitcoin and I learned about Ethereum. I was very excited about Ethereum for a while, and then ICOs, right? Although ICOs were a little bit iffy, with all these coins asking people to buy some token, and then I was trying to basically make the connection. Why am I buying a token? What does that represent? And how does that? There was one company that was trying to sell a cell phone and raising money through the ICOs, and I was thinking to myself, what does that have to do with anything? Like really. Anyway, long story short, it came across Cardano after researching the space. I decided that I'm going to be focusing on this crypto space, even though it had really a large proportion of scammy sort of projects. The fundamentals seemed quite intellectually robust. And I started basically getting into the hashes, which is the way that the protocols secure their themselves. And I got into the mining and how the whole system worked. Because when you're new and you come to the ecosystem, you say, okay, so I'm turning my real hard-earned dollars into some digits and then sending them to some wallet, and I'm supposed to be 100% sure that they will be there. And I tell you, with UTXO, which is what the Cardano has, every time you transact, the old UTXO gets retired and then the new one comes in. And I tell you, the first time I did that, I thought I got hacked, because I was like, oh my gosh, I sent the money to one place and it went to two different places. So I had a mini heart attack the first time I tried it. Anyway, so when I came to Cardano, when I came across the Cardano, I started reading all that beautiful material that they had, because one of the greatest things that that the Cardano community had at that point that nobody did, Ethereum was just all over the place, and you had these personalities that were like sort of worshipped like demigods, et cetera, and then whenever you wanted to learn something deep, there wasn't too much, information. It was all about, oh yeah, Vitalik said this, that other guy said that. And I would be like, no, this is not a structured way to learn things, and you can't ask critical questions. So I stumbled across Cardano, and it was a treasure trove of information. And I just went in there and started studying and started reading all their papers. Yes, some of the math was really hairy, even for a financial guy who is very well versed with numbers. They get into like very, very sophisticated, cryptographic primitives that are really you need PhD for that. But yeah, long story short, I got really excited about Cardano because of its vision, and because it had wealth of information that was cohesive with that vision. And quite honestly, I was quite taken by Charles's depth of knowledge and how he approached this industry and this protocol, and how he saw this protocol making a difference in people's lives. And he was one of those people who who said, okay, I don't know everything, so let me just go hire a PhD in game theory, PhD in cryptography, and let's just try to do it from the ground up and see where we are missing the gaps. And before they did anything, I think they wrote a paper about why Bitcoin works, because up to that point, I think nobody knew why Bitcoin works from a academic standpoint. So once they had that, then they built upon those concepts and built Ouroboros. The first version of Ouroboros was very sort of limited in the sense that you needed, okay, I'm not going to go through I'm not going to go into the depth here. So the second question was, what was the second question again?
Basically, we hear all about, Cardano being a protocol for, and I've been told not to use the word protocol, but, like throw more light on protocol. But basically, it's for the unbanked. Like a lot of times we think
financial,
of Africa.
Financial, what they call a financial operating system for the unbanked. So that was one of the hardest sort of things for me to grasp. And I asked that question in my interview with Charles in Slot Leader, which is the podcast that I'm a host of. So I have to say that when it comes to technology like this, it's really it doesn't do it justice to just basically say, oh, it's a currency. Oh, it's just a world computer, because there's so many things that you could build upon a decentralized platform. I mean, before I became interested in blockchain, I was an infrastructure banker, which means that I used to finance projects that would, build roads, build power plants, build, you name it, the critical infrastructure. So basically, the transportation networks. So I see the impact of this technology as a base infrastructure, but it's a base infrastructure for the financial and economic, and it's a financial and economic infrastructure for a project, for a country. It could evolve into something like that. And Charles and his team are consistently building the components of that infrastructure, and I see that every time he talks, every time a new sort of product is introduced. For instance, for the longest time, I had doubts about, how would they account for people, for instance, right? In the infrastructure. If you're a financial infrastructure, you need to have identities and whether it's an identity of a company or an identity of a person. And they solved that with, their, the Prism protocol, right? The Prism component. So they are methodically going into that state where I am absolutely sure, or have a high degree of confidence that at some point they're going to go into countries and say, I have a turnkey solution for you that will revamp your banking system, automatically connect it to the world. It will give you a system where you will have your companies and your population basically transact on a daily basis and see what's going on in your country as a central bank. You don't, and the best of all is that it's going to cost you pennies. And when you think about why developed countries are developed, it has to do something with the system of record keeping. It's very expensive to build. It's very expensive to build from a point of view of resources and talent that you need to have in a country in order to make sure that they run consistently, right? So in the United States, for instance, right, when I buy shares using TD Ameritrade, right, there's somebody there or some company that is keeping track of all those shares. And guess what? It costs you a lot of money to to sustain that infrastructure, because it's a bunch of companies, and depends on what TD Ameritrade, who TD Ameritrade has contracts with. But imagine all that infrastructure that's very expensive in the developed world being replaced by a protocol like Cardano, because natively you have a something that keeps track of assets, and all you have to do is introduce an asset, and you have a new currency basically, and call it whatever currency you decide. And it doesn't require that much power or money to actually run these systems. I'm a stake pool operator. I know what I'm doing, and comparing to the amount of money that we're moving, each stake pool operator is not making that much money, and the system overall is not very expensive.
So
Right.
what I'm hearing is that Cardano is maybe an upgrade on Bitcoin. It's an advancement of the technology, right? And part of that is more efficiency in the network. Part of it is also more capabilities to the network. Okay. So I have a question for Jay and a question for Umed. For Jay, I know you're an infrastructure guy. And so I'm curious about what are the most prevalent reoccurring problems that you run into when it comes to financing infrastructure projects? And for Umed, what part of the Cardano infrastructure excites you the most, right? So if we can move beyond what Bitcoin does as a store of value, what's most exciting? Sorry, I just wanted to put both of those questions out there. Maybe start with Jay.
Yeah, of course.
About how you approach real world projects.
Yeah, so great question, James. To give you a good example, about a month and a half ago in Maryland, the United States' biggest public-private partnership, the Purple Line, failed, and the state of Maryland had to step in. And that's one thing that I've been noticing over the last few years is the United States trying to pay for more infrastructure projects by bringing in private dollars and consultants. And what's been the problem there, for one, is just that for the United States, a PPP, P3 is still new, but there's a lot of space to innovate. When I was in Europe, PPP was innovating and had been being used for the last 20 years. So it's really about, recognizing that states may not have the money to fully finance a project right away, and bringing in those private partners to pay for aspects of the projects, the tracks, running the trains. And one small thing falls out of place, it could cause the whole tower of dominoes to fall. And that's what happened in Maryland. I guess I'm curious to see, how finance can be potentially modified to bring in Bitcoin and to have a little bit more stability, because P3 hasn't been as stable as predicted in the US.
Yeah, so we have to realize that in the US, and I've done a lot of PPP projects all around the world.
Wonderful.
In the US, the structure is quite different, and I've studied it a little bit before getting into crypto. And in the US, the municipalities have historically been responsible for financing infrastructure projects, and there are bonds that are issued in order to finance these things. And my understanding is that the the local budgets don't have a lot of capacity right now. They basically can't borrow anymore. So that means that they need to attract capital to refinance their infrastructure projects or build infrastructure projects, but that financing will have to come from outside. So here's the thing: with the outside financing, is always more expensive than financing on your balance sheet with a full faith and credit of a municipality, for instance, right? But the private partners usually bring some way of they come up with some way of innovating your infrastructure, because they're profit driven, and it's very good for infrastructure in a sense that if there is a better way to run your infrastructure, they will come up with that way. And as a result, you get, as long as your PPPs are defined really well, you could get a best of both worlds, where your infrastructure is run very efficiently, and the private party makes its fair share of money. And we're not talking about 8 or 9% or 10% or whatever. There could be infrastructure projects that have those kind of returns. But normally when you give a concession for 20 years or 15 years, you might be looking at 7, 8, something like that. So those are really, really lucrative projects, and the investors love them because they come up with locked pricing. Now, when you talk about Bitcoin and other modes of financing helping here, I don't see a parallel or ways of the reason why I say this is I don't see yet the infrastructure in place, the financial infrastructure in place in order to finance these projects, let's say in developing markets. But when we have an ecosystem where we have sort of financial markets, independent, decentralized financial markets, and we have the budding of those sort of types of instruments right now on Ethereum. Most of it, not most, but some of those are okay, I guess. But the concepts are being worked that will allow you to crowdsource certain things. Right now, it all is revolving around liquidity. So you provide liquidity, you get your interest, and that interest is generated by, I don't know, whoever is taking that liquidity and turning it into something else. So if you're a trader, you think that you could do better than paying 8% loan or whatever, you just basically take that loan and do. And if you're a provider of liquidity, you can earn money on your ether on top of whatever it earns. So there's that. Now, I hope that the answers question. I don't know.
I know I'm going to be that person as well. What is PPP, Jay?
Public-private partnerships. It's a mechanism to allow a government, a municipality to work with private partners to get a project financed. And it's really about the details. It's really about the negotiation. And I've seen PPPs in Italy where they had an agreement where they were able to build the tunnels, build the stations, but oh wait, you forgot to tell me to build the trees. So I'm not responsible for that. The municipality has to pay me more to put these trees in because we didn't negotiate this in the beginning. So it's all about the negotiation.
Okay.
One thing I will say, also with blockchain technology, it being a ledger that everybody can see, the set of records, the one good thing about it is you're able to see where the money goes, because that's an issue with a lot of our systems right now, is that we put money into certain systems, but we actually don't know where it actually ends up. So that also just helps with the challenge of money. We know where our money is going, as opposed to giving our money to whatever system it may be, whatever company it may be, and they say they're going to do this, and it never ends up there. And then in the long run, the people have to pay for it.
Yeah, I mean, I can see. That's one. By the way, that's one of the things that makes the open blockchain, at least the types that the Bitcoin follows, apart from those privacy coins, very not a very good way of conducting illegal activity, because it's the last place where you want to be conducting illegal activity, because everything is, as you said, Aziz, everything is recorded, and as soon as they find out the first transaction, it just can be traced, right? So and there are software companies that actually specialize around finding out, even if they don't know everything, they can find out with certain degree of confidence that where the money went, because it's all public, right? Yeah. So
that our governments, the institutions that we trust to a certain extent, use those kind of systems, because they're not they're not innocent of committing crimes as well. They're quite as capable, but yet we have to just trust them, but they're behind closed doors.
I can literally think of like current examples with like the UK government, and where all the money for PPE, or the COVID protection
PPE,
stuff,
yes.
All these contracts have gone to friends of ministers, and there's no PPE for like hospitals, for like care homes. So it's like, you know what, if that was on like a record that everyone had access to, I think there'd be a lot more kind of ability to scrutinize these people and say, hey, I think that's, yeah, you can see how key that is.
Developed nation. The UK is supposed to be a developed nation. Imagine what's happening in the
Josh has just put in the comments that he laughs in Nigerian politics, and it's just like, it's so true.
Yeah. And
so just a quick interjection here. Umed, when you were talking, the main thing that I was taking from what you were saying, especially after what Jay said regarding, trying to all these balancing acts that needs to come together for funding to come through. So, like when we think of the poorest areas of the world, right? The issue is normally not the human capital, like it's not human beings. People are working hard, right? It's not natural resources. Like when you look at Africa, for instance, it has just so much natural resources. And, elsewhere like Nigeria, like they have tons and tons of oil, but there's still a big issue when it comes to funding infrastructure and stuff like that. What I'm taking away from that is the access. I think that the main thing might be, well, first of all, yeah, you did mention access to good record keeping, but also is it access to funding? And maybe as Aziz is saying, that the funding should go to the right place. And if that's the case, do you think that Cardano can do that or any other blockchain? Like I'm thinking tokens here, like, is that a good way for me to be thinking?
Yes, yeah, absolutely. So here's the thing. When I started thinking about integration of a blockchain into the current financial system when trying to solve the current problems, right? So some of the lowest hanging fruits are basically things like deeds, right? In the US, when I buy a house, I never know if it's it's got problems and whether its deed is encumbered by some other financial liability. So I have to hire a lawyer that goes into the records of the municipality and checks all the things. And it's an expensive endeavor, right? So imagine if that deed was on a blockchain, a local blockchain. Let's say that, the municipality of my local municipality has a blockchain, and all you have to do is just to put in the number, and it will just tell you if that deed is encumbered or not. And I just basically take out all that cost that I would pay to a lawyer to do that manual, tedious job. So that's in developed market, right? In developing nations, so here's the thing: record keeping is quite important. And as I said, in the US, it's a patchwork of everybody has their own records, and they don't talk to each other. It's just the way that we developed, right? In Soviet Union, where my childhood basically, took place when I grew up, it's a different kind of set of record keeping. It's like centralized, one database, and then they have all these, records there. And it's all like with, access from one entity, or one government does that, right? But in essence, it's record keeping. It's just the fidelity of records, what happened, when happened, and when it ended, and think simple things like that. And you think about ledger and blockchain technology, and that's what it is. It's a system of record keeping that keeps records of who sent, Bitcoin, who sent how much to whom, when. That's it. That's what it does. And its implications are so vast because it's tamper-proof, right? You can't say, okay, well, I'm the mayor of this community, and let me just tamper with records and say that I sent this much, but I actually put some in my pocket. It doesn't work that way. So in that regard, now in the United States, we believe our institutions at least to do the right job because there's systems of checks and balances, right? If some government does something really bad, or some mayor does something bad, there's an incentive from the opposition who wants to be the mayor next time to actually find that out. And there is the media that wants to get these stories out because they're driven by ratings. So it's kind of an invisible hand that's pushing the system to be compliant all the time. And those are basically the basic elements that keep this society together in that respect. That doesn't exist in developing world, because this one big guy who came in and he won, and then he just wiped out all his opposition, which is why democracy is important for this, right? And then once you took care of all your opposition, then you are basically the ledger, right? You say, okay, I did this, and then people can't question you in that respect because there's no objective way to measure what you did and how you did and what happened in the economy, for instance, right? Now, when you adopt a decentralized ledger like Cardano, which is not owned by one government, or then you basically sort of create that transparency in such a way that nobody can if you do something, then people will see what happened. And you know, and that's probably the biggest impediment for decentralized applications or decentralized systems to be accepted, because whew, I mean, all of these countries, not all of them, but a majority of them have, you know, the people in power that do not want to reveal certain parts of their transactions. And that kind of also applies to developed nations. So they have to have some sort of workarounds when it comes to adoption. So you could say, okay, anything that has to do something, has to do with the budgets of defense, you know, let's say, you know, sensitive information that we just basically encrypted, nobody sees it, for instance. And anything else, you know, there are gradations of transparency that you will be able to see. So I'm afraid this is where we're going to go. It's not going to be like, I know what, you know, each government did at each point of time, because that's just not practical. Nobody would want that kind of level of transparency. That's why people have spies. They just be pay, you know, each other to, you know, to spy on each other. All these things. But
I'm thinking, Umed, that maybe it would be a carrot and stick situation. Whereby, you know, like every government needs funding, every municipality needs funding, right? So, you know, like on the blockchain is going to be, okay, so if you will accept these tracking, you know, and I'm thinking of decentralized tracking, right? So if you're willing to accept all these decentralized tracking mechanisms, then you get the funding, right? Because within blockchain, I believe, and maybe that's what you're going to say next, within blockchain, we can actually raise funding, you know, in a decentralized way. We get the tokens, we decide that, okay, we're going to build, and people, you know, help with the funding more or less, right?
Yes, absolutely. Now, look, in a very optimistic scenario, let's say that there's excess of capital in the United States, right? And there is, you know, an extreme shortage of capital in developing markets. And the reason why that exists is that those markets are risky. They're opaque. They, you know, I don't know if if I go into Nigeria or any other country, I dump like $60 million, whether I'm going to recoup it. And I've seen many cases where, you know, an investor comes in and then invests a lot of money. The government says, yeah, we're going to give you all these kind of things. And then when the investor builds the asset, and then the government says, okay, well, the situation has changed, and, you know, you're not going to get the rate that you were promised, and things like that. So these are called macroeconomic risks or political risks. And there are ways to mitigate them. You know, I used to work for the World Bank, or actually for IFC, which is International Finance Corporation. We kind of provided that kind of an umbrella for private capital. So let's say that, you know, somebody wants to build a, there was, I don't know, was that in it was a very famous project. I think it was in Nigeria. It's called Bujagali. It's like a big power plant somewhere. I think it was in Nigeria.
Help you there, Umed. Jay, if you have any questions, please feel free to ask. Okay.
Yes, I do have a question. Yeah. So for the last few years, Egypt has been building a new administrative capital outside of Cairo, and they announced earlier this year that all transactions will be digital. I'm just wondering how cryptocurrencies and Bitcoin will play into that, especially with the COVID-19 crisis. They've decided to accelerate this. What's your opinion on digitalization and just how developing countries are pushing that? You know, yeah.
No, absolutely. Look, I thought about this in two ways, right? If you were a country that would like to digitize, and you could see a lot of benefits from digitization, one way you could do that, but you do not want to sort of give the control over your country or, you know, economy to an open blockchain, for instance. One way you could do that is to create a what we call a closed-end system, where, you know, your blockchain is only for your country and for the citizens of your country. You know, so you can just basically say everybody who has you know, the passport comes into, you know, a digital identity issuing authority in the in the government, and you show your passport and you get a digital ID, and that digital ID unlocks all slew of services for you, from banking to paying mobile phones to paying your taxi driver, etc. And and that digital sort of that blockchain could be the backbone for that particular country. Now, in the case of Cardano, you could have a copy of a sort of a Cardano looking sort of a blockchain that's interoperable with Cardano, the open blockchain. And if the governments want to basically use certain parts of the open blockchain, the Cardano blockchain, they could do that. So there's that kind of synergies that could exist. But so you will have to have the governments would want to have control over their currency and their economy, which means that in the first iteration, it will be a blockchain that probably powers the entire country, and the servers would be located somewhere in that country. And that architecture is a little bit risky in the sense that if that country gets cut off from the internet and things like that, and that it wouldn't work, right? Or if something happens within that country, then the infrastructure gets jeopardized. Now, the next evolution of it would be to say, okay, well, my currency will exist in an open blockchain where the nodes are all over the world, and hacking that blockchain is going to be much harder. And then you give access again to your services in whatever you want to have on that blockchain based on the identity. Let's say that I'm a Nigerian citizen. I have a Nigerian identity, and that unlocks certain number of apps. And
Umed, we've got a question coming through, kind of asking,
yeah.
Have those kind of systems been built already, or is that something that's still in development?
I think the Cardano is probably in the forefront because they have that vision that I can completely agree with. But I haven't seen anything that's that is like ready to go right now.
Tangible, like on the ground. Okay.
Can I actually have a follow-up question to that? In the future, could there be a international organization or entity that handles this? That's neutral and not necessarily attached to one or another country, because there's some concern, especially in developing countries, with neocolonialism and funding being tied to things. So I'm wondering if that's something that could potentially be of use to developing countries.
Yeah, so the architecture of open blockchain is just that. It's just like internet. It's not owned by anybody. Although internet has some body that basically defines the standards, right? But it's not owned by anybody, and all the countries are quite comfortable using it. So you could argue the same thing, that maybe there will be a standard body that would develop so the standard body that would govern its what happens to a blockchain like Cardano, for instance, but it won't be owned by anybody. And it's actually a feature than a bug, because if I am building my economic system in a blockchain that where one or two countries have an enormous effect on, that actually presents a systemic risk for a country. Because if we take a hypothetical situation, country A and country B, right? They're neighbors, and one day country B decides to be a bad neighbor, and if the bad neighbor has undue influence over the blockchain, then you have a problem, because they could do economic blockade and things like that. So I mean, so that basically pushes all the countries to actually be in an open blockchain, because it's not owned by anybody. The risk is very dispersed all over the world, and it's cheap to run on, and all the other good things that come with it.
Umed, there's something that you're saying that's just like literally in my head prompting me to ask. You say it's not owned by anybody, and I'm really curious about that, because I kind of have this. I mean, I'm definitely not like experiencing just jumping in a couple months into this and all, but I kind of have this idea of like it's actually owned by everybody, like that kind of idea of we all have ownership inside it. I mean, how does that kind of fit into what you're saying, or is that in line, or is that a different
No, you're right. I mean, when I say it's not owned by anybody, it doesn't mean that it's like there's no ownership at all. I think if you hold ADA, you kind of are The ownership actually is expressed through voting, which is what we're working on, right? So it's like through the system of governance. And as long as the token distribution is very dispersed, in a sense that you don't have the majority of people, or one faction basically controlling the majority, you're pretty safe. You could assume that whatever decisions that will be made will be representative of the majority of people. Or if the base is very dispersed, then you could say that I trust those systems. Whereas let's say that if Cardano's tokens 50% of them was owned by one country or something like that, then it would be a difficult situation, because then they could just say, okay, we have enormous voting power, and whatever mandate that is being proposed, let's say we're gonna have a veto, and then just do whatever is beneficial to us. But that's not the case here, and it's been dispersed pretty well, I think, from the beginning, and it's going to disperse even faster when we have the decentralized funding, because every time there's going to be a separate group of people who are going to come into the ecosystem, and they're going to get ADA, right? And do you think all of them are going to just turn around and sell it and build whatever? Maybe, maybe not.
So it sounds like the more decentralized it gets, it sounds like almost that everybody's going to work in the best interest of the blockchain to a certain extent, because otherwise it will fail them. And if they are utilizing it for their economic system, for their financial system, if they use it in a negative way, it's just going to affect them anyway. So you have to a certain extent, you have to act in the best interest. Not saying that you can't not act in the best interest, but it probably wouldn't benefit you if you did be a bad player.
It serves you to use it well, basically.
Yes,
I feel like we need like a part 1 and a part 2 to this conversation, because we spent the time right now really talking about system level stuff, right? Nations and international systems. And this is such a cool transition point now to kind of moving towards individual actors. Should we keep this one going longer, or should we split it into part 1 and part 2? How's everybody doing?
I'm good. Yeah.
Can we keep going? So yeah, because this brings me, so Jay, just for your background, Cardano adds, like Umed is saying, this governance layer. And Umed, I'm like you. I didn't care too much about blockchain until I heard the idea of smart contracts. That's when I was like, this is going to be something, not just money, not just store of value, but programmable money that we can make do certain things. Cardano brings it up another notch on top of that, right? Governable money. Owning this money makes me a stakeholder, and I can participate in governance decisions. Now, as individuals, I think we all have a lot of work to do to get ready to own this responsibility, right? And actually, yeah, Jay, let me hand it off to you. So as I share kind of those ideas, where does that get you thinking about?
So 2 things. For one, one thing that has really warped my mind the last 45 minutes is the fact that blockchain and cyber currencies are a lot more transparent than I thought. Just judging off of the stuff that I've seen on the news, I thought it was something where people were just throwing their money and, kind of pissing in the wind. But it seems like the complete opposite of that. I guess my second part is there any best practices, Umed, that you could share with municipalities or central banks interacting with blockchain, and maybe even semi-endorsing it?
Yeah, it's a good question, Jay. I think about a year ago, I was invited to the U.S. Senate to talk about blockchain. One of the aides for the senator met me in a bar, and I was talking about blockchain, and he was like, "Oh yes, Umed, this Bitcoin, it's such a bad idea, but a blockchain, that's really good." And I said to him, like, well, you can't separate the two. And if you want one, which is blockchain in the most secure way, you kind of have to have a mechanism, an incentive mechanism that will keep it safe. And that kind of triggered, I guess, the question in his mind. And went to his office and I tried to explain to him how the blockchain worked. So to answer your question with regards to like what can we teach or what can we tell the central banks or the municipalities about the powers of blockchain, I guess the best thing, and that's something that I try to convey every time. It's a message that I would like to convey to Charles, and I'm sure he knows because when he talks to the heads of states, that one of the biggest pain points is taxes in developing markets. It's especially because you don't know who's making how much. You could go and say, I'm going to send a bunch of militant guys to okay, your security the security team to go to this director of this big plant in your country, which you think is supposed to be making a lot of dollars, but they are paying peanuts because they are everybody's faking their account in these countries, right? So but in reality, it could be that they had a really bad year, and if you just tax them, it means that they're going to go out of business, right? So or conversely, there could be one guy who's very fat and he's just like skimming the fat and paying his buddies to just leave him alone in the equivalent of IRS in other countries, but he's getting rich, and he's getting rich beyond belief, and nobody knows about it. And so when you try to talk about blockchain, you could talk about taxation first, because you will get their ears perked immediately. It improves the taxable base, and here's how. If all the economic activity takes place on a blockchain, meaning that you're a bank or you're a company, you have a wallet, and that wallet needs to accept money and needs to disperse money, and then having those sets of records, you could reconstitute all those financial statements. And when you do that, you don't even have to hire a bunch of guys with guns in order to levy your taxes, because the system automatically will do it just the way that Cardano does, right? Just takes, every time we get rewards, 20% is taken off, and we don't even feel it, right? We just know that 20%.
Quick question. So theoretically, a small municipality could make the decision, hey, we feel more comfortable because of transparency, switching over to this system for not only paying our employees or paying for local services. Is that theoretically possible?
Absolutely. I think it's possible, because US dollar could exist in a digital form. We see it with USDC. For instance, USDC is, I think I like it more because I think it's regulated. USDT, I don't know what's backing it. But the thing is that you could have currencies exist, stable currencies exist on blockchain, open blockchain, side by side, the native currency. But the fact that you need to have the native currency in order to move it, which is good for the underlying blockchain. But yes, you could do that, something like that. You could just say everybody who is in our municipality, they open up a wallet in Cardano and transact through that wallets, through those wallets, and then you just basically assign them wallets and say these are your wallets, so you could keep track of these things, and voila, you got your.
Sorry to interrupt you, Umed.
Yeah.
So would you say that Cardano is universally applicable to any country?
Absolutely, it's an open blockchain that anybody could build upon, and that's the basic idea. Yeah.
I will say something in terms of like blockchain technology. I'm here in Europe, in Dublin, Ireland. The European Central Bank is looking at creating a digital currency. Like, our governments all over the world are already looking at this stuff. Yet there are people on the news saying, "Oh, this is bad, this is evil." But like, the big players are already looking at it. They're already interested in it. Do what you want with that information.
No, I mean, it's true that everybody's looking at this, and I think the cryptocurrencies plus COVID accelerated this pace, because they think that having digital currencies and or a digital infrastructure that keeps track of currencies is a very efficient way of managing your economy. And that actually, in my head, raises a lot of questions. And in that respect, I'm kind of aligned with my predictions with Raoul Pal, because he thinks that CDBCs, CBDCs, central bank issued currencies, will ultimately make banks redundant. I mean, if you think about the bank, right, what is its function? Its function is basically, in the old days, was that it was the representative of the monetary system or monetary policy of a central bank in the local jurisdiction, whatever that may be, right? And yes, they kind of function as a private entity, but in their essence, they are basically the extension of the monetary, institutions of a country. So they collect data about the state of the economy, because every bank, every corporation, or every every person has a bank account with them. So the central banks can take the temperature anytime, talking to all these banks, because they're all interconnected. So, and then the second one is that they provide the leverage, right? So when the central bank issues currencies, there's this money multiplier effect. When I issue $1, and in the banking system it turns into 20, for instance. There's this multiplier effect, and that was necessary because I think, and again, it's just my conjecture, because printing money, that much money, was just too cumbersome logistically. Now, imagine right now, it's just like the central bank can just push a button and create any amount of money it wants, and and take the temperature with these kind of systems on a second basis. Right now, or maybe 5 or 10 years ago, in order for the bank to make a decision about the interest rate, they had to take a look what happened in the past 6 months in order to say, okay, well, we'll raise the interest rate here, or we'll lower it here. But now with the central bank issued digital currencies, you can do that on the fly. You can just see what's going on every second. So what I'm thinking will happen is that the banks will go out of business, or they will transform into something completely different. I mean, the third function that they have is to lend money, or be the credit markets or whatnot, for the population. But I think that function could be very efficiently outsourced to, you could talk about it as imagine, right? Because here's this picture. You have a phone in the future that holds your US digital dollars, and there's an app that looks every day or every 5 minutes and basically picks the best interest rate for you for the foreseeable future. So it basically is automatic, and depending on who, and we're talking about these liquidity centers or money markets, or you name it. There will be something that will be completely autonomous. We won't be even called banks, probably. So what will happen is that I commit myself to this platform that is giving me 8% per year, and that platform is going to use that money in order to fund different kinds of projects on their platform, and that automatically takes place, and there's no need for a bank. There's no, your money is with you, and in order to be able to, let's say, spend it, maybe there will be some sort of a third-party key, that will be involved in order to spend it. For instance, you could just say, okay, I'm sending it to this guy, but you have to go through the node that's owned by a transformed bank, let's say, because you couldn't send it by itself. So maybe something like that will exist, and I think the structure of the banks as they currently exist is just too cumbersome. It's just like, in the age of cars, you try to basically justify the existence of horse carriages.
So Umed, it kind of sounds to me like you're literally saying that blockchain could potentially replace banks. Because I was going to ask you, and then you started talking, and you just went into this space where it kind of answers what I was going to ask. Because when you were talking about this small municipality, kind of going into and saying, okay, we're going to pay our employees with, or we'll create this token thing that kind of represents the currency. I was thinking, well, then how does that work? Would you just like swap cash and banks for blockchain? Because banks right now, they're just like, everything's digital anyway. So it's like you're moving from the banks being the digital people with the digital money to blockchain being the digital people with the digital money. Is that
No, that's true. And the thing is that the current structure of the banks, there are people in there. I mean, even if you most, digital bank you can think of, they have people there. There are a lot of people who are, most of that, not most, but there's a big chunk of it is with compliance. There's IT systems that are in place that make these banks run. And all of, at least on the IT side, could be completely, solved. If the main function of the bank from a consumer's perspective is to hold your money, they don't have to exist. I mean, right now they don't even have to exist, right? Because digital dollar is there. And by the way, you can make home money with USDC.
Sorry, we
Yeah.
went well over the time.
Sorry.
No, that's perfectly fine.
Yeah.
We're still going to continue. We can continue in the next section of the show. But I just want to end it off here and say, I just want to thank everyone in the audience for being part of today's show. Wherever you are in the world, I'd like to thank our FJ and our expert, Umed. It's been amazing having you on the show today. To
Thank
our
you.
audience, if you're watching on YouTube, hit subscribe and follow us on Instagram and Twitter at AfroFinLab. So the show has ended, but the conversation clearly continues. I'd like to take this moment to invite you behind the curtains to our post-show discussion, so feel free to stick around.
Woo!
Yay, that was